Hey everybody, welcome to the Mark Loeffler Experience. We have Mandy and Larry Branham here to share with us their knowledge on real estate, joint ventures, partnering with your spouse, trading. I mean, this is going to be a jam-packed session. Guys, if you like these, go down below, subscribe, hit that notification bell so you guys get notified every time a great video like this comes up. Obviously, smash the YouTube for the like algorithm. No, smash the like button for the YouTube algorithm. And definitely comment down below if you guys like these, who else you'd like to see on here, what else you'd like us to talk about. Happy to do it. Again, this can be every Friday segment. So here we go. Let's get into it. So Larry, Mandy, tell us a bit about yourselves and yeah, we'll go from there.
Hey, thanks for having us, Mark. I have to say, Larry, welcome. It's so nice to have you as part of it.
Well, to be honest with you, I wanted that, Larry's like, I was setting this up and Larry's like, oh, okay, yeah, Mandy will be on. I'm like, no, you have to be on or she's not coming on. Right. Like, it's just not going to happen. I go, Larry, like you have a lot of good information to share. We need you on there. Like, you know, I mean, Mandy's the JV queen and you're the support behind it. So people need to know what that is. They just can't see Mandy, and Mandy makes it easy. And you can explain everything else behind that.
Right. So yeah. Manny negotiates and deals with the JV partner, and then as far as running the construction side on that whole thing, I take over from that side, and then when I'm done, we pass it over to we have another team member that's not on the show right now, and his name's Curtis, and he's our property manager.
Nice.
You know what? When we started out investing, Larry was the rock. Larry is my rock. He actually gave me a rock one time, and he was like, it was a gift, and it was a beautiful gift because he said, I am your rock. Okay, so for all these times that I was, hey, honey, I think I should leave my job, Larry was this rock in our company. Larry is like our rock in our mindset. I might be like off into La La Land, and he, come back to this solid rock. So Larry was always, that saying, don't quit your day job too soon. Well, I probably for 2 years could have retired Larry into our business, and he was like, no, I can't leave yet. No, I can't leave.
Okay, number one, what does your portfolio look like today?
So we've transacted on 88 properties since 2015. We currently hold 67, 158 doors.
Okay, decent. How much of your own money do you have in it?
Maybe 200,000 total.
Okay.
Out of a $28 million portfolio.
So so for 158 doors, $28 million, you put in $200,000.
I think that might be what we have left invested.
All right, awesome. Now, when did you step into this full time? What did your portfolio look like? When was it?
Because of Larry's solidity in his job and him not being able to move anywhere, he was the breadwinner. I was the part-time, stay at home, part-time with the kids. I left from a medical admin job, and I think that was early 2016. So we had joined a coaching program end of 14. I think we transacted on 5 properties in 15. So we might have been holding 5 or 8 properties. And 2016, I already had 6 deals in the pipeline ready to go, and I wholesaled the property for $35,000. So I said to Larry, this is my chance. Let me take this 35 grand and use this as my income for 2016, and let me see where I can go with it.
And you've taken it a little bit.
A little bit.
She ran with it.
Yes. All right. And so, Larry, when did you transition out? What did it look like?
So out of my job. So it was kind of funny. Back in 2016.
Larry, you got to look at us though, buddy.
A little bit before us, we started focusing in on personal development a lot, growing ourselves. So before I transitioned out of my job, it was they were moving me up in rank. So that's kind of why I stayed longer, because I was middle management by the end. But I went from
solid middle management.
Yeah, middle management roughly. And then, so I went from machining into design. So I did design for a year or two.
Is
Quality
that why?
control.
Is that why Mandy tries to pimp out your AutoCAD skills?
Yes, that's it. Yeah.
Oh, he's a genius when it comes to that and computers. Oh my gosh. Yeah, it's crazy.
I need a Larry in my life, I think. So.
Yeah.
So yeah, I really didn't. I didn't even feel the need to actually leave my job. Like it was a nice job. It was an office job. I had a phone and everything, and then
Phone.
yeah, nice quiet little spot. And then
now you're thinking about going back now, aren't you? Like he's reminiscing.
Whenever we get into an argument, he always like, it'd be easier if I just went to my job. It would just be easier if I just went to my job. We definitely have those. There was 3 properties we closed on in 2 weeks at the end of 2016. And I was like, I did the best that I could to get end of day appointments with the lawyer so that Larry didn't have to miss any work. But 2 of them, he had to leave his job. He had to leave around lunchtime or something for us to go sign at the lawyers. He was so mad at me that I couldn't coordinate these lawyers' appointments to close on assets after work. And we just refinanced one of them for $250,000 in our pocket while still maintaining the asset. And it was like, are we okay now that I made you leave work for a couple of hours for that, $250,000? Are we okay now?
yeah. In the moment, it wasn't the greatest because, as I said, I grew. So then my responsibilities at work also grew, right? So holding that reputation and status, and then all of a sudden billing, leaving whenever I want. Like I went from an hourly to a salary. So it meant salary meant there.
Ball and chain.
Yeah.
You had a chain.
Yeah. So
and Larry, you know what? Beautifully, I think it's really important to actually acknowledge where your spouse is. So before we brought Larry onto the business full time, I actually masterminded with a high level partner, like a business lady. And we actually went, what is the role that Larry's coming into? So Larry did not come on to Mandy's team under Mandy. We
that's a very good point, by the way. Like that's massive. Yeah. We
really knew where Larry was going to be mentally. He needed the structure. He needed to know that this was going to be not a Mandy show. It was going to be a Larry construction company. We opened a corp. He is the owner of the corp. We opened up a bank account. Yes, we transitioned the jobs that my company was offering to him. So we had instant jobs. He had instant staff members. And then the trading thing just happened. We actually, a year before I had heard you, Larry and I had went into, look at his eyes. He's not even looking at us right now.
He's trading. He's looking at that XPX trade I told him about earlier.
Larry, we knew that Larry he wasn't into the real estate the same level that I am. He's pretty risk adverse when it comes to how much leverage and things like that. And so the trading was just a perfect opportunity for him to be able to utilize his skills, his expertise on technology, and go forward from there.
Yeah. All right. Well, I mean, so good. So you were talking a bit about, so you brought him into the company and he basically had his role, and he does the construction portion, you put the deals together and they get managed by somebody else. It sounds good. So you had $200,000 and you own $28 million worth of real estate. Well, so, I mean, and you do a unique joint venture structure. Like you're not like, it's different than mine. It's different than Quinton's. It's different.
Not
so
much. I don't think so. Well, it's good.
I mean, I think so.
You?
I don't know. Like it's funny. Like I look at you and like Sandy and those guys, and you guys obviously develop it way different than I ever did, right? So I mean, just tell us what do you like? What did your joint ventures look like? How is that like? What did it look like 2 years ago? What does it look like now? How's it evolved?
So the interesting thing I think about my joint ventures, 50-50 joint venture structure, I actually, the more that I grew into my self-worth and be able to be like, yes, I am worth 50% of the deal for the value add that I bring to it. And time has also showed me that, there's one property we have as a triplex. It's gone from 290. It's probably valued at about 600 right now if we had it appraised. And I was like, wow, am I not a genius to be able to have seen this deal 3 years ago and it's gone up $300,000? Then I sat back and was like, wait a minute, the real genius is the fact that my partner is in British Columbia. I've never shaken his hand. I've never actually met him except for video conferencing. And he certainly never stepped foot, never spent any time, never managed, never anything. So the genius in these 50-50 deals are the people that can see a working partner that's like, holy crap, I want to be on her team. She's going places. You know, like I want to invest with Mark Loeffler. And why?
Well,
why not? Because that's just who I want to invest with.
I want to invest with Mandy Branham. I just don't want to get residential mortgages.
I know. So we are transitioning out of that. I had a mentor of mine, Andrew Brennan, was like, what the hell are you doing? Like, go big or go home.
What do you mean? I told you that like 2 years ago.
Yes, you did. I know. You all have. You seriously all have. But you know what? The interesting thing, Mark, though, I'm helping people who can't necessarily get into commercial mortgages. So I am servicing a niche.
I know you are. And this is why, I mean, this is what I wanted to talk to you about, is that's what I think you're doing different. So this is what I want to talk. So walk me through that. Yeah.
So, you know, I'm working with a gentleman right now. He's got 2 other assets, but he realized that after 3 years, he's not building the portfolio like he wanted. He and his wife both make excellent money. They've got capital, they've got cash, and they just need somebody to be able to help them. But we want to be able to maximize his residential mortgages first. They like the small stuff, you know, the 2 to 4 units, and it allows them to use their capital in the highest and best use.
I always say that the 2 to 4 units is you maximize your return. Like it's better than the commercial side. It's just a matter of deployment of capital and mortgages. So
and still finding the right markets. So I've switched around markets a little bit. So you know, we started off here Midland, Penetang. We went to Aurelia. We're in Barrie. And now recently we went to St. Catharines, which is the city from hell. So we spread out to different cities because we want to make sure that our model still works.
Right. So let's go back. We'll talk about that. Let's dial it back 2 times.
Okay.
Let's talk about the joint venture structures again.
Joint venture structures.
So where did you meet this person?
So as you build your presence, this gentleman and I had connected once in 2017, and then he'd watched
Where did you connect?
Keyspire.
Okay, so you met him at a networking event, yeah.
A networking event. And then he reached out, and I'm pretty sure he just reached out from online. So pretty random, but you know, people start to follow your success. So they start to follow, what are you doing? They start to follow your consistency. They start to see that you're evolving as an investor. You'd be like, oh, I thought this was a part-time hobby of hers. And now you're like, wow, like she's now serious about this. So
well, and that's what I think like you and Sandy do this, you guys do this very well, is like you promote yourselves huge on social media. Like you probably wouldn't like to look at me like, oh, well, I don't know that he owns anything. Like I posted a couple pictures of apartment buildings I bought, but at the end of the day, until I started a YouTube channel, I don't think anybody knew. Like I was like the guy, like I could have just been the janitor there.
People are looking online now. People are looking for you in your online presence. They're actually saying that before, Mark, you would have needed like 5 or 6 touch points. Oh, I saw you at this networking event and I saw you here and so mentioned you. And now it's like double. Okay, so they need to like see you on a podcast, hear you on a podcast, see you in a picture, you know, like all this kind of stuff for somebody to be like, okay, now they're in my sphere more than I want to pretend to ignore them. Yeah. And I'm not a marketing guru. I have a company that does that for us. So I'm just focusing on networking with people who want to be passive investors. Like I have a mantra that I say to myself, I'm looking to attract people into my business that want passive real estate.
So, and I know that you would, if somebody wanted to, like they want to learn the process, you would take them on joint venture with them and walk them along. Are you still doing that?
I do tell people that I don't coach unless you're a joint venture, and then the coaching that you get is strictly just seeing how I do things. So they're going to learn more just by being on my team, having a property with me.
They can walk the process with you.
Yeah. Here's how we set up the joint bank account. Here's how we account for it. Here's the bookkeeping process. Here's how I talk to my mortgage specialist, because you're on the call and we're actually talking about you. But you were like, oh, I wouldn't have even known what questions to ask. And so here I am learning as I'm going. But for that, I don't take a coaching fee. I take half of the equity of a property.
Yeah. So, I mean, how many different joint venture partners are you working with right now?
45.
Is that a question, or do you want Larry to make a comment on that?
45.
45. 45 different joint venture partners. Man, I got one.
I know.
Well, actually, that's a lie. I have more than one. Yet, yeah, wow, that's a heck of a lot. Like, is that like going to continue? Like, it's just like, or
Yeah.
I mean, yeah.
I have the
It's
systems to
working,
be able
right?
to
Yeah,
take
yeah.
on. I've got the systems to be able to take on the same amount. Talk to my power team. They all know. And we're actually getting better at the systemization of it and setting up strategy calls with joint venture partners. So they all have access to me. It's, they know how to come in. But I am certainly looking to attract that one investor that has like, a $30 million line of credit and just says, here, Mandy, go do what you want with it.
To be honest with you, those guys don't have $30 million lines of credit. Well, they might, yet they usually just have $30 million in cash lying around.
Right. That's the one. That's what I'm looking for.
So for the person who doesn't have one,
okay. Yeah.
What are the systems and models to keep in touch with 45 different joint venture people? I mean, because I have trouble. No, I don't have trouble with my 3, but it's a lot different. That's a business.
Yeah. See,
Like,
you're a
that's
realtor.
a business in itself.
You have a job on the outside. This is my full time, right? This is what I'm doing.
Well, you have a sugar daddy down there, right? So
he does all my joint venture agreements. We've systemized that. He also does all the upkeep of the bookkeeping, right? Anything that's systemized. I'm trying to think what else Larry does. Oh, I mean, and he took on all the project management for all of our local jobs.
So Larry, walk me through a little bit about the procedures that you do. Like, so how often are you sending out like a report to your joint venture partners?
So usually that's all done up front in the joint venture agreement. Like Mandy does some high level numbers at like renovation cost and that. So my reporting.
You guys aren't doing like a quarterly report or yearly update?
Definitely yearly. like as far as the construction side reporting, it's like, okay, we're in, so the first stage, let's say, is demo, right? So then before demo starts, I take pictures, a lot of pictures on job site, and then the boys go at it, demo it, I come back in, or I get them to take pictures. So the demo's done, we send it off, and I usually.
So you're sending them progress reports.
Yeah.
So as the construction goes.
On the fly. Yeah.
Okay. Yeah. I mean that they don't care. They just want to know what's going on, right? That's what I found. I do
yearly year-end reporting. I don't promise to my partners quarterly. I don't promise big fund manager quarterly reports. That's not what I do. And they can kind of see it because it's small, Mark, too. Remember, we're getting $3,000 a month rental income. We got one mortgage payment, maybe utilities. That's it. Like there's nothing crazy to report on.
Right.
Yeah. They get to see the bank account as well, right? Like it's a transparent, they have sign-in rights as well as Mandy. So
they can go in and clear out the bank account?
No, it's 2 to sign or whatever that is.
Yeah. I'm just joking. Sorry.
I know.
If you're watching the video, don't get any ideas if you're Mandy's partners.
But the interesting thing though, Mark, is there's a lot of them, but it's like each of them are really unique and individualized. And, like we've helped people build their net worth that were like, Mandy, we never thought we would be here. Hey, we didn't realize that life would even get as busy as it is right now. And we're really glad that we did those. We've got partners that did 4 deals with us. They're going to be able to recycle out all of their money out of 4 deals. And they're looking at buying more. We're hooked them up with a Scotiabank rep and going to hopefully buy another 4. So
here, if you guys are interested in what Mandy's talking about, we did a great video on that. I'll link down below, or maybe I'll put it up here at the end of the video that you can guys go watch the BRRRR strategy, the ultimate wealth strategy. And I mean, that's what you do, isn't it? Like that's what the majority of your projects are.
Some of them are turnkey assets. turnkey triplex in Kingston. Glorious cash flow, like $1,500 in the first 3 months with one tenant turnover. Just a great purchase in a great location. And the strategy on that was just a 5-year hold. So no sexy burr strategy on that, just a solid $100,000 invested in this asset. So,
I mean, it's funny, like I get people call me and talk to me about, you know, assets, and I'm like, well, if you have a long-term time horizon and you buy like a good quality building, I mean, it's gonna go up in time. So if, I mean, your returns, no, I don't think is as good as a burr, yet you can still just do a buy and hold, like buy a good asset, paint a little, put a couple lights in, and on tenant transition, you're gonna get a better, obviously you're gonna add value.
Yep. I think it was you that said almost any piece of real estate will look genius in 10 years, right? Any little mistakes, you paid too much, you know, whatever, time's going to heal those things.
Well, I have 2 mantras. Number 1 is the best time to buy real estate was 50 years ago. Second best time is today. And the other one is, I know I'm overpaying, and in 5 years, I'll look like a genius.
Right. Yeah. That's a hard one for a lot of people, though. So, you know, one of the things that, you know, you can kind of tell from the expert working partners, or, you know, a lot of people go, oh, are you the financial partner or the working partner? And they can envision us with hammers. And you're like, yeah, no, I'm not touching the hammer. So
I do like to kick down walls sometimes if that's necessary.
Yeah, you could do that.
I don't like to clean up the mess I make, but kicking them down is fine.
So they will partner to be able to utilize our confidence to say like, whoa, I would never do this deal on my own, or I don't know, I can't, you know, is this even a good time to invest? And I'm like, if the deal presents itself and we have phenomenal conversation with a broker who says, yeah, I can get this done for you, then let's go for it. There's no reason not to. But I don't think those people wouldn't take action on their own. So they're almost looking for, I kind of use it like the tandem skydiving example, that, you know, if I'm going to jump out of a plane, I'm going to be strapped to an expert. And there's a lot of real estate investors who are like, you know what, I just want to buy real estate and I want to be strapped to that expert right there. And I'm like, come on, let's go. Not a strap on.
All right. Well, this just took a turn. I mean,
wow.
That's funny.
Okay. Comment down below. No, never mind. We won't do that. Would you say the majority of your joint ventures you've met at networking events, and then they followed you, and then they've then done deals with you, or is it now that, I mean, you have a great following, right? So
the majority of people I did not start with a handshake. I did not meet them in person. Maybe
so you were doing COVID-19 before COVID-19.
You know, I know in your real estate world, there's a lot of people going, oh, would you ever buy a house without seeing it? And I mean, hilariously, the joke is that 95% of my joint ventures have never stepped foot in their assets, because that's not the point. They're passive investors.
You know what? In the investor world, we've been doing that forever. I bought an apartment building without ever seeing it. Like, it came up at 7 a.m. on thing, and I was like, wow, that's a good deal. By 7:30, I had an offer on it. By 8:30, I had a sign back. By 9 o'clock, I had bought it. And I'd never have seen it. I knew where it was. I could have driven by it if I wanted to, but I was busy. And by 8:30, like so by 9 o'clock when I accepted it, they had 10 more offers.
Right.
Nobody had seen that property.
Right. So it's just a matter of which level of expertise are you with? Because I think that's the way to get deals. So would I have partnered with you on that deal? Yeah, because the majority of people are like, oh, I can do it myself. And they're one of the ones going, well, can I set up a viewing? No, it's already sold.
Well, it's funny though. My partner still likes to walk through the units if he's around, because he's local. And, you know, I told him on that one deal, that was our first deal together. I said, listen, this is the best deal we're ever going to buy. I'm not trying to bullshit you or anything like that. Like, this is a good deal. And we had dinner. We have dinner once a year. It's easier to do when you don't have 45 joint venture partners. You can do that. Sorry to Mandy's joint venture partners that are watching.
No, we have dinner with a lot of them though. They come up this way. They come and see it. Yeah, they come up this way.
And yeah. So, okay. So you attract them. So where are you attracting them? Like you have a podcast, you have a YouTube channel, you have Instagram,
You know what?
you're
And all of this
speaking,
is,
or
you know what? We're talking the last year that I've had all this stuff. Maybe year, if you want to say 2019 into 20, sure, absolutely. But, you know, I did 16 deals in 2016. That year that I left my job, we did 16 deals. You know, we were attracting them by the enthusiasm we had, by the energy we had. And yeah, I was part of a group and there was a big mailing list and we could connect with all these people. And Larry'd be like, hey, are you coming to bed? And I'm like, I just need to send out 100 more emails, right? And I would be sending emails to the other side of the country so that I knew they were awake and they weren't going to think, who's this girl sending emails at midnight?
well, here's what I'm hearing right now is you put in a lot of work. I hear people that come to me and like, how do I joint venture? How do I find somebody? Well, I mean, go talk to a couple thousand people.
Yeah.
If you want to have 45 joint venture partners, you talk to more people.
Mm-hmm.
I
you
mean,
feel bad when you don't remember. They're like, you don't remember me, do you? And I'm like, ugh. And then they start the conversation. I was like, yes, I remember that conversation.
I mean, that happens to me all the time too. So, I mean, you just talk to so many people and like, here's the thing, like you put yourself out there. I mean, it's similar to any business. This is a contact sport. You just made more contacts than anybody else.
Yep. That's the network marketing thing. Jim Rohn says, talk to 10, get one, talk to 10, get one. If we had a competition and you could talk to 10 people and get 9 in a month, you talk to 10, get 9. If I talk to 10 and get 1, in a month, I'm going to beat you because I'm going to talk to 100 people and get 10. And you're going to think that you're smart because you only talked to 10 and got 9, but I actually am going to win because I'm going to talk to that many more people. And then you know what happens? You get better. I remember the first time I got off the phone with somebody and I got off the phone and Larry's like, wow, that was quick. And I was like, I know, she already said yes. And the point being was I was getting better. I was able to say the things that I already knew they needed the answer to. I already knew the points that were going to be pain points for her because I would listen to her story to be able to say she needed reassurance, she needed protection, she needed this, she needed that. And so I would just address those things a lot quicker so that our conversations could be quicker, and boom, then she was ready to go.
Right.
So I'll also add to that if I can.
Yeah.
Like we are also in the midst of building our own portfolio, like our own houses we were building, right? So we were right in the trenches. We were doing it. So everything we spoke was all about what we did, and it was 100% legit, right?
You had a story.
Yeah, huge.
That's how I get joint venture partners. I have a story. Like, whoa, what's Mark's story? I do this. You want to come see? Sure.
Right. That's exactly it. Story.
Yep.
You had a compelling story, and you contacted enough people to tell them that story, and lo and behold, 45 joint venture partners. So let me ask you this. Have you ever fired a joint venture partner?
Yep.
Okay. Why?
Yeah, you know what? And it's always like, it was like, come on, Larry, I need your support here. They were not a good fit. Very questioning, you know, I'd send them a $20 cleaning bill and it would be like, what's this for? And I was like, are you crazy? Because I'm done. Like, I'm done. And it was everything. You know, we would like, okay, how much time did it take to replace that toilet? Are we sure it was 4 hours? Was it not 3.5? You know, did we get the best deal? Did we shop around? Like, it was ridiculous. Walking on eggshells for this person. And so finally she said, hey, you know, I don't think this is going in a good spot. We said, that's fine. So she got an appraisal on the property, told us the number, didn't share it with us, you know, but we had already had a number in our mind. So we walked away from 2 assets. Now, interestingly enough, Mr. Larry there kept saying, I love those assets. We're going to regret not owning those assets. We're going to regret not owning those assets. And on the other side, here I am going like, just get rid of this girl because I'm done. Okay. So It's like, it was a difficult decision. Do we keep the assets and deal with her? Or do we just get rid of the assets and take our loss? So we ended up getting $85,000 per asset after owning them for 3 years. So we got $170,000 to walk away from 2 assets. And honestly, it was freeing.
Yeah. Is that what Larry's trading now? That 170,000? No.
Mark, you know how it goes. It just kind of like flows from here to there and into this asset and into this asset and paying off this mortgage and that mortgage. And, no, but yeah.
All right. We did just sell one though, so we do have some cash coming in. So I'll be able to.
You're going to slice some of that off for the trading account?
Yes.
Yeah.
Now, you own a crap ton of real estate. You can buy a whole bunch more without using any of your own money. You can buy bigger stuff if you want. You can continue doing the small stuff because you've got a great strategy where they get the mortgages. You guys are the working partners. So why would you even get into something like options trading? I want to hear because Mandy is the one that made this happen. Larry probably wouldn't have done this if it wasn't for Mandy. So,
well, we tried, as I say, we tried a year before. So I think it's been a year and a half that you two have kind of been, that Larry's been trading. A year before that, we'd signed up at some Brian Ballmer conference for a trading course. I took Larry.
I
spoke at that conference. I think it was that one at the International Center.
No, this
was it was in Barrie. I did look into stocks earlier on before I even left my job.
Okay. So keep going with the story, sorry.
Yeah, our accountant said diversify. We knew, you know what, your flipping presentation with the buckets, it was a pain point for us. We didn't have cash. We were this long-term buy and hold. We'll get paid after the partners get all their money back, which is such a great strategy when you are 5 years into the strategy. But those first 5 years to grow it, I kind of tell people that there's not a ton of cash.
Yeah, it's painful.
Asset rich, cash broke. So we knew we were transitioning some of our cash and we wanted to be able to maximize the cash. And I also like that, Larry's a little, that's his thing now. We don't have to be Mandy and Larry in the real estate game. It's Mandy doing real estate and Larry does stocks. So I'll let him transition into that now.
Well, and it's funny. I remember when this all started, he was like, I don't know that I got to be on the job site at this time this is my time for when I put all these things. I'm like, well, just do it earlier or later. I don't understand why, the market's going to open when the market opens. That's not going to change. So, and now you obviously have figured it out. It's been a while.
Yeah, no, I've learned a lot, especially over COVID here, about trading.
We all have,
yeah, not only just puts though, buying calls and buying puts, all different kind. And now there's these iron condos and all these
I still don't know
bear calls and stuff like that. That I've just watched a few videos and did some paper trading and slowly learning. And no, it's very passive. It's very my decision when I'm trading. It's now I'm getting into charts, so there's technical that I can now know about quite a bit about the technical side.
Do you follow my buddy Mikey Ulano?
No, but you were supposed to throw me his number, but you never did. I joined up for options training course online. So
okay,
yeah, and it's been really good. It's more on the technical end. So you don't make the trade until the chart tells you to make the trade. So you have to. It's kind of like it's almost like day trading because you have to be watching your indicators and all that.
See, I can't do that. I watch the stocks I like, and when they're at a price I like, I'm just like, well, let's sell some naked puts on these. Right. Or I see. Well, listen, I'll just follow you when you do the trades, and it pops up in my WhatsApp, and I'll say, oh, the charts must say yes. Let's do a trade. So
right, yeah. The indicators are really neat now that I'm getting a handle on them. But again, it's not passive. Like when you do a put, you can just ride it because you don't have theta or
you don't have time decay.
Yeah, you don't have them against you. Whereas when you're buying, when you're buying them, you have that against you. You really gotta, I really like using the charts in that for a trade where you're in and out, like you're catching the hour, if that.
Oh, I don't. Yeah, that's day trading. I don't do that.
One of the reasons that makes Larry such a good trader is, as you can tell, he's very detailed oriented. So between the two of us, I'm very high level thinker. I'm a, D in the disc profile, like just boots to the ground, let's get going. And Larry's always been that, like, whoa, let's think about this a few times. Let's just make sure that this is the right strategy. So sometimes I'm pulling him along to be able to say, like, hey, let's go. Other times he's slowing me down to be like, hey, let's make sure that we're looking at things really strategically. So, I mean, it's a good mix. But
well, it's funny. I was just sitting here thinking, like, oh, the difference between a D trader, myself, and a C trader is that obviously he's like charts and indicators and all that. Yet, I mean, we can both do a strategy. I just have to know that I'm going to get stuck with stuff sometimes, stocks. I'm going to have to own stuff. And I mean, I think the biggest trick for all of this is patience, is what I've learned in the stock market and real estate is if you're patient, at the end of the day, if you're buying good quality stuff, patience will pay off and it'll make you smart.
Yeah, and action though too, right? Like there's one thing to be able to analyze and do the numbers and run the pro formas and look at the properties, and maybe I should take my husband back and maybe my contractor through, and do I need an electrician to come through? I heard one guy one time and he's like, I camera all the lines of my properties before I buy them. I was like, oh, okay, cool. Like, it's not wrong. And I think in the larger buildings, maybe that'd be a cool thing. But I was like, who has time for cameraing lines?
Oh, well, yeah. And I mean, you can buy a 30-unit building. I don't know if I want to see what's in those.
Oh. You just buffer your reserve fund. So, one thing about us and our 45 joint venture partners, we've had some pretty cool calls over COVID to be able to say, like, Mandy, thank you. And I thank them just as much, but we've got some great reserve funds. Each property is nicely covering itself. Cash is in there, good connections to tenants, superior property management that's still being, overseeing all the assets. And so, they're really connected to their asset.
So, okay, again, perfect transition. Larry, you're done with options. Thanks, buddy. What are you doing differently in COVID? Like what are you doing differently for joint venture partners, to attract joint venture partners, buying properties, existing properties? Go through it all.
Yeah. So for my existing partners, we've just kind of indicated that it's going to be no cash payouts right now. We're just going to kind of, what's going to happen on April 1st. We're all in this together. What's going to happen now on May the 1st.
So it's April 29th. And when this airs on Friday, it'll be May 1st. And we'll be like, so Mandy, can you do us a favor on May 1st? Can you just let us know how many rents you get?
Yeah.
Comment on the YouTube video so everybody can see that.
Last month, I'm going to do it on May the 2nd, just to tell everybody, watch it for May the 2nd, because last month we were 95% of our rental rate, but that was probably more on like the 8th or 9th. There was some of those people that applied for the curb benefit a little bit late. So it's really just being in communication with our partners right now, really good communication. What am I doing to be able to look for properties? I'm looking for discounted properties. Like, I'm not just looking for the, this is a good price. I need a great price right now to be able to put out there to my partners. I'm definitely listening to their concerns. I'm actually having more people reach out. So I think right now there's a lot of people going, shit, welcome to Larry and Mandy in 2007 when the stock market went down, our RSPs went down, we had a leverage loan that like disappeared, and so those are the people that are kind of in the awakening moments right now, and they're going, there's got to be a better way for me to make money, and this can't happen again if I'm 55 right now. What if this happens again and I'm set to retire? So there's a lot of awakenings going on right now, and those people are turning to the experts to be able to say, okay, I need to get this done fast, but I don't have the time to learn. So there's kind of two places, because a lot of people are going to turn to education. They're going to be like, I can self-educate myself and figure out how to do this myself.
And they're going to watch all my YouTube videos.
Yep. yeah, they are. And at the end, they're still not going to have an asset. They're still going to call you or I up and or Quentin D'Souza, and they're going to say, I just want to buy an asset with you because it's easier, because it's less work, you know, and there's a lot of knowledge out there, but, you know, honestly, Mark, you're on my list of wisdom. And I think people need to start to rifle through that. Oh, look at this guru. She's only been here for a year. Look at this guru. You know, I don't even know if he even has real estate, but he's talking about real estate, right? So there's going to be a lot of weeding out of all this stuff. So people are going to try and learn themselves to be able to invest in real estate, or they're going to just turn to an expert to invest in real estate. But either way, they know they want to add real estate as part of a diversified investment portfolio, period.
Everybody should own real estate.
Everyone should own real estate.
It's funny. I was on a call with a bunch of realtors this morning, and they're like, "Yeah, why should realtors own real estate?" I'm like, "Well, everybody should. Like, should be part of your portfolio. Like, whether it's a single family home, a duplex, a triplex, doesn't matter. Like, this should be part of a portfolio that you have. I mean, it shouldn't be all your assets, which I think that was one of our issues when you saw the buckets. Like, for me, it was 99.8% of all my wealth. And it's like, well, that's a little scary.
Mm-hmm. Yeah, it was. So then what am I doing to attract those partners? Solid deals, solid investments, and meeting them where they're at. You know, if somebody's like, oh, I'm not sure, I want cash flow to cover, then I'm looking for a cash flowing asset. If I'm looking for somebody who, you know, I had a gentleman that said, I want to buy an asset for my son's retirement. So his son has some health issues.
Geez, I need a parent like that.
Right?
Yeah.
Well, I don't think his son is going to be able to work in his life. So
I tease.
It was beautiful.
Yes.
So I listen to what it is the partner wants, and then I connect the type of asset to that amount. And a lot of times, you know what? They've got $100,000, they've got 150. So I've got a strategy that if someone's got $300,000, we can go out and buy 2 BRRRR properties, typically, you know, in and around there for $300,000. Utilize that. I need 2 mortgage qualification spaces. When I refinance, I probably leave about $50,000 in each asset. So we'll pull out 200. We go and we do it again. So really you could have 3 properties in a 2-year time slot for me, which is, you know, 6 doors. That's probably $9,000 worth of gross monthly income. So, I mean, like, it's a significant growth of a portfolio with no hands-on, no nothing. So that's a strategy that you can kind of, if you can show somebody what your vision is. Have you been called a visionary often?
No.
No? I have been, and I do classify myself as a visionary because I can see what that asset is going to look like, and I can share with somebody what that vision is. So the stronger the vision, and the more you're able to, like, offer them to come on board to be part of that vision, that's what people are going to be looking for right now. They need guidance. I'm
just going to go through what I think some of the top tips I've gotten from you in this is, if you guys want a joint venture, like, it's a shotgun approach. It's a splatter. Like, you just put it out there to everybody. Email everybody. Call everybody. You know, talk to as many people as possible. So, I mean, that's taking huge action. Right? If you want to be successful in anything, it's just go out there and take massive action. If you talk to 5 people, it's probably not enough.
Yeah.
Right? So go talk to 100 people. You know, the other thing is, you know, I keep going back to it, and you alluded to it, is that different assets for different people.
Yeah.
Right? And it's not one size fits all. So, I mean, that's why, to be honest with you, I think I direct more joint venture partners to you than I work with by myself, because I'm not in that same space you are. I don't have that system and model set up that, like, it would frustrate me to do what you do. Right?
It's frustrating on days. I hear you. Absolutely.
Yeah, I get it.
Absolutely.
So, I mean, those are my top 2 takeaways, and just massive action and tailor the fit for everybody. And the other thing is diversification. So, I mean, anything else that you guys want to leave us with before we jump off?
You know what? I value Larry being part of my team so much. I wouldn't be where I am without him. But I really, no, and I talk about my Larry all the time, but I do think it's really important to acknowledge your partner's strengths and not try and have them, like I'll sit down and I'll have, two people on the same call. Like they're both trying to do the exact same thing. And I think you can double your action if you divide and conquer. Okay.
Yeah.
And so I look at this and go, he needed to stay at his job so that we could have financial stability until it was time for him to come over. When he came over, we created the construction company, which totally alleviated so much time off of my plate, allowed me to grow, and allowed him to have this new business empire that he's building. And now he's diversifying into stocks. And as you can tell, it's not my space.
Yeah, we saw the funny faces you were making during that. So that was a little talk there.
Larry, you want to say goodbye?
Yeah, goodbye. No. Yeah, the stock thing has been a huge learning curve for me. It's awesome. I love it. I love how passive it is towards just me. The construction side gets noisy, but so does everything else, right? So
Expect the noise. Noise.
I don't know if you caught the Quentin D'Souza when he was on the channel, but he talked about that too, is pick your partners that for their strengths that complement your weaknesses.
Yeah.
Right.
Yeah.
Right.
We did listen to it. We have listened to your episodes,
Well, I have.
Oh, I think Larry subscribed before Mandy.
That's right.
Probably.
Yeah. All right.
Okay.
Well, on that note, everybody, go like and subscribe. Turn on the notification bell. We're going to put Mandy and Larry's contact information before, but do you want to let people know how to find you?
MandyBranham.com, or you can book a discovery call, hop on a call if you want to do an investment. Just Mandy Branham online. We have the 7-figure Canadian real estate investing group on Facebook. So just some high level content going on there.
Awesome. Thanks again, guys. Have a good one.